Hello, my name is GrizelvaGarcia, and I'll be talking about the cost of capital for AT&T in the year of 2009. First question is, how much interest-bearing short-term debt did AT&T have at the end of 2009, and what was the average cost of this debt? At the end of 2009, current maturities of long-term debt were 7,328 in millions, and the given weighted average interest rate for 2009 was 4.3%. Number 2, what was AT&T's actual capital structure at the end of 2009 based on its consolidated balance sheets? As shown in the balance sheet and illustrated here, the short-term debt for 2009 was 7361, the long-term debt was 64,720, and the stockholders' equity was 102,325. All of these numbers in millions, and therefore the capital structure was composed of 4.22% short-term debt, 37.19% long-term debt, and 58.67% of stockholders' equity. For number 3, it's now recalculate AT&T's capital structure using long-term capital, for example, long-term debt and common equity. So, by using the components of long-term debt and stockholders' equity, we get two ratios that our long-term debt to total long-term capital ratio is 38.74%, and the common equity to total capital ratio was 61.26%. Now assume that AT&T wants to issue fixed rate 10-year bonds if their investment bankers tell the firm that they can do so as at a spread premium of 1.5% greater than the equivalent maturity Treasury security. What would be AT&T's before tax cost of this long-term debt? So after calculating, we got and researching, there was a yield rate for treasuries of 1.58% for a 10-year bond, and the before tax cost for long-term debt resulted in 3.08%. Let's note that the current yield could be different from the yield in 2009, as the yield varies with. Now use the average tax rate for 2009 listed in this financial note as an estimate of AT&T's relevant marginal tax rate to calculate the after-tax cost of short-term debt and long-term debt, the bonds. While the U.S. statutory federal income tax rate in 2009 was 35% and the effective tax rate was 32.4%, the after-tax cost of short-term debt was 2.9%, and the weighted average before tax cost of short-term debt was the 4.3%, which we noted in a previous problem. And the after-tax cost of long-term debt was 4.46%, and the weighted average before tax rate cost of long-term debt was 6.6%. Now apply the capital asset pricing model security market line to estimate the KS for AT&T. Assuming market risk premium of 7%, use ask yield on a 10-year T-bond as an estimate of the risk-free rate. And so we got an estimate of beta by looking at different sources, and which averaged in 0.54, and The estimated cost of capital for AT&T was 5.36%.